welcome to the foundation. Appreciate y'all. Definitely. I think, this is going to be a great show. We talking about the benefits of tax exemption and private foundations. Bottom line, if you know me, if you've been listening to any of the shows over the years, you understand really what I'm about and what I'm not about. And what I'm not about is about that ridiculous adversarial, controversial, public controversy type behavior for whatever reason, and I'm just not with it. So when it comes to this adversarial public controversy, I don't participate in public controversies, and I think arguing or going back and forth, or I think this stuff can really get to the point where we're talking about it and we're dealing with a public controversy, which is, I'm just being honest. And this is just my opinion. And this is not legal advice. I don't give legal advice. And, this whole entire show that we're doing is not to be construed as legal advice. This is for informational, educational, and entertainment purposes only. But I'm not with the controversial, dishonorable behavior, the controversial, dishonorable attempts at executing business, because it's all business, Even a traffic accident, in the exchange of insurance information, it's just business. People get upset. You hit my car, all this stuff, but really, realistically, it's just business. And when it comes to, business, and when it comes to being private, y'all know where I'm at, and I'm dealing with the private, contractual entity. And with that, that specific entity, I'm looking to administer it in a certain way. And within what I feel, every estate and within every private estate and I'm saying it, everyone who is, quote, generating income. You understand what I'm saying? Most people, I'm going to say everyone, if given a choice, no one would pay taxes. No one would pay income taxes if given a choice. I can't think of anyone. I'm like, yo, you got a choice to pay income taxes, and you have a choice not to pay income taxes. And then they'd be like, you know what? I'm going to pay income taxes. I don't know anyone that would say that. I really don't. So, this being the thing. But what people don't understand is universal laws are the principles underlying every success in any and all areas. I'm going to say that again. I'm going to say that one more time. Maybe not. Maybe I'll say it a couple more times. But I'm going to say it again right now. Universal laws are the principles underlying every success in any and all areas. Boom. And it may be like, oh, my man said he's going to talk about the benefits of tax exemption, private foundations. Why are you talking about universal laws? Because to take advantage of power or realistically force, one must be accountable and responsible and trustworthy. Accountable, responsible, trustworthy. That is to take advantage of power or force in a proper manner, that there's no negative power or force that comes back to you. Now, I don't know. I don't know how you look at things. I don't know what your philosophy is, but I do know that what I'm saying is absolutely true, 100% true. You can't get around it. You can't get away from it. You can ignore it. You can do whatever, but you're still subject. You're still subject to natural law. So, in understanding that, I'm going to move on to the next point. Yes, I'm talking about the benefits of tax exemption, private foundation, private family foundation to be specific. But I got to bring you there in a certain way, in my opinion. Otherwise, I'm just talking at you. I don't want to talk at you. Y'all know I don't talk at y'all. So, knowing that universal laws are the principles that are underlying every success in any and all areas, and knowing that in order to take advantage of a power or force, one must be accountable and responsible and trustworthy, we got to take a step further and understand that to go somewhere new, you must do some things differently. I know, oh man, he's getting all philosophical. He likes to sound smart, or whatever. That's not the case. I'm trying to, you got to get to a conceptual point to where we can really, get on the level. And if you're going to talk about tax exemption, if you're going to talk about, a private family foundation, you got to understand what it is. So first and foremost, it is an entity created in trust form. I know a lot of y'all probably were like, you just assume that because it's so L talking. And so L is 9 times out of 10, he talk about something in trust form. Unless he's specifically talking about an LLC or something. I'm talking about something in trust form. I know that trust knowledge, administration, and law to be the foundation required for the proper administration of entities in the commercial realm worldwide. It's not just America. So a private family foundation is a tax-exempt entity that is structured in trust form. So that's what I mean. Part of all of this is understanding that we own nothing, we control everything, and that's not something cool to be saying. Oh man, I own nothing. Oh man, that sounds cool. I'm gonna say that. Nah, man, it is a universal law, fam. You own nothing. You own nothing on this plane. Nothing. You don't even own your body. You will leave your body. It will still be here. And hopefully your wishes with your body will be, followed, but you have no control over that, man. Everything that you possess, everything that you gain, quote, physically on this plane is not yours. It will never be yours. It's just in your control. So, when we get to moving out of this public mind state of ego, of mind, like children, watch children sit around, give them toys and stuff. Watch the mind dance. But yeah, tax exempt, structured in trust form. It's really, what is it? It's the difference between controlled knowledge and true knowledge. It's the difference between social capital versus taxes. It's the difference between voluntary taxation and involuntary taxation. And you're like, oh, I thought that you're talking about a tax exemption, right? But either way, not all structures of a private estate will be tax exempt. Though typically there's only one tax exempt structure. It's a foundation. It's a family foundation. Think Bill and Melinda Gates Foundation. Think Rockefeller Foundation. Think Carnegie Foundation. Think Mark Zuckerberg Foundation. Think all of the the Clinton Foundation. Think of all these different family You've heard them. You've heard family names before the word foundation. That's what I'm talking about. Typically, only one structure is, of the family estate is a foundation. The other structures are trusts. Why is that important? Well, a certain type of trust can donate 100% of its taxable income to a charity. And then take a charitable deduction on its 1041. And that charity being a private family foundation show and prove what I just said earlier. You own nothing, control everything. So if the foundation is under the control of the family members, which it is, it's called a private family foundation. You can look it up. Private family foundation. Do you still control the quote money? Is it still under the control of you, or your family and so on and so forth? This is it. I'm telling you. There's no arguing. The Internal Revenue Service sends the tax exempt letter in less than 30 days. Amazing. There's no argument. There's no rebuttals. But, the foundation must have a charitable purpose. Charitable purpose, religious, educational, scientific, literary, testing for public safety, or fostering national, international, amateur sports competition, and the prevention of cruelty to children and animals. The term charitable is used in its generally accepted legal sense and includes relief of the poor, the distressed, or the underprivileged, advancement of religion, advancement of education or science, erection or maintenance of public buildings, monuments, or works, lessening the burdens of government, lessening neighborhood tensions, eliminating prejudice and discrimination, defending human and civil rights secured by law, and combating community deterioration and juvenile delinquency. Now, you got income. It's going to be taxed, whether voluntary or involuntary. The involuntary tax would be, a charitable donation to a private family foundation, of course. The involuntary tax would be the Internal Revenue Service. Certain types of trusts that are able to donate 100% of the taxable income to a charity. Private family foundations, individuals can donate 30% of their adjusted gross income to a private charity and receive a charitable deduction on the individual's tax return. Even those in the public, even those who have jobs. So what is it? I will say this on the air. I was thinking about what I was going to say, for this show, because this information is kind of kept close to the chest because we get into some other stuff, But I will say this, it is there are multiple different types of foundations, and typically you just want to offer grants. And like I said, this isn't legal advice. You need to talk to people. You should email me admin@welcometothefoundation.com. But please understand, oh man, just please understand. For those of you that can hear what I'm saying and can kind of add two and two together, I will say this, a private family foundation is tax exempt. It can generate income off investments tax free. Offering loans at nominal interest is an investment. It's an investment instrument with regards to a private family foundation that's tax exempt, holding a security agreement, a loan agreement, where the payments are to be paid at interest, at nominal interest. It doesn't have to be crazy high interest, and it can't be super duper low interest, like never heard of, never seen before. Come on, man, you got to substantiate the dance. But a loan, if I'm loaning you money, I'm investing the money that I'm loaning to you, because I'm gonna get the money back, plus I'm gonna get interest. Okay, so a loan is an investment. Private family foundations can generate income off investments tax free. You need to holler at a tax attorney. You need to holler at a lawyer. You need to holler at someone who gives legal advice. I'm not giving legal advice. And loans can be executed between individuals and businesses and trust. I mean, businesses and trusts are legal persons. On the individual side, I wouldn't. But I can't give legal advice. I can say what I would do in that. I wouldn't. But on the LLs, on the business side or the trust side, baby, to generate income off investments tax free. So technically, the money can come back to another entity that's controlled in the form of a loan. Y'all rewind that. Listen to that. I'm done. Look, foundation, 4 do's and don'ts. The 4 do's of a private family foundation: do receive donations to the foundation. That's number 1. Number 2, do manage the assets of the foundation. You got to manage it. You're a trustee. It's the same thing. Fiduciary responsibility. Number 3, do honor what is known as the 5% payout rule. The 5% payout rule. And, of course, because it's tax exempt, the private family foundation does not pay taxes, but there is a requirement that it expense 5% every year. So out of 100% of the donations that the family foundation receives in a calendar year, it must expense at least 5% of that. One more time. Of 100% of the donations the private family foundation receives within the calendar year, it must expense at least 5%. Be in the form of grants, charitable grants. Number 4, do comply with all filing requirements. The filing is a 990 PF. PF stands for Private Family Foundation. Stands for Private Foundation. The 4 don'ts of private foundations: don't self-deal. Of course not. I mean, you're a trustee. You understand that, right? Number 2, don't make bad or jeopardizing investment. Why would you do that? Number 3, don't create or maintain excess business holdings. I'm not giving legal advice. I'm just saying, you know what I'm saying? And number 4, don't make any taxable expenditures. And you got to check out what a taxable expenditure is. I'm saying, I don't give legal advice. I don't give tax advice, baby. You know what I mean? We educate with regards to, trust administration. But according to the law of tax-exempt organizations, written by John Hopkins, self-dealing in general, the federal tax law prohibits acts of self-dealing between a private foundation and a disqualified person. The phraseology is also in the definition of an excess benefit transaction. The definition of an excess benefit transaction is based on the contract law concept of consideration. It generally is any transaction in which an economic benefit is provided by an applicable tax-exempt organization directly or indirectly to or for the use of any disqualified person. If the value of the economic benefit provided by the exempt organization exceeds the value of the consideration received for providing the benefit. So bottom line, I wouldn't self-deal. 5% payout rule, the basic rule is simply stated each year every family foundation must make eligible charitable expenditures that equal or exceed approximately 5% of the value of its endowment. The word payout, while convenient, is somewhat misleading and is not used in the tax code section that creates the rule. The word payout suggests grants or contributions paid out to other charities, although these grants normally make up more than 92% of expenditures. Most foundations, many other expenses also qualify in meeting the minimum payout requirement. In short, the 5% payout rule need not be satisfied solely with grants. Grants, administrative expenses, payments made to acquire charitable assets, set-asides, and program-related investment also are included in the 5% payout rule. That's according to Family Foundations in the Law by John E. Generally, the limit of 20% of shares outstanding. Definition of excess business holdings. You don't want your foundation to own more than 20% of shares of any company. Private foundation is permitted to hold no more than 20% of a corporation's voting stock or other interest in a business enterprise. It'll be the same thing with an LLC. These are permitted holdings, and if effective control can be shown elsewhere, a 35% limit may be substituted with a 20% limit. The taxable expenditures pertaining to the matters such as legislative activities, electioneering, grants to individuals, grants to non-charitable organizations, and grants to non-charitable purposes. Improper and in effect prohibited expenditures are termed taxable expenditures. So anything prohibited. Bottom line, you got to be careful. And I know. I expect y'all to download this or record it or, whatever, and, listen to this over and over, take notes and do your own research. And then email me at admin@welcometothefoundation.com if you want to move forward. But I'm going to tell you this. In my field, there's two types of information. There's two types of people in this country. There's those who come from informed families or uninformed families, period. And there's two types of information. There's either controlled knowledge or true knowledge. And I'm going to tell you this. I don't care what letters or numbers or whatever is behind your name. It could be doctor or whatever. I don't care what degrees and whatnot. That is controlled knowledge. The public educational system has been controlled since the early 1900s by the very, very wealthy families in this country. If you don't know that, you need to do some research. There's some shows, at least one show that I did within the last year, I think, where I broke down the educational system. And you can check it out. The public educational system, and specifically the university and college level educational system, is heavily controlled by private families through their foundations. Deanships, professorships, and chairs are all endowed by private families or foundations. And this is how you get your hands into the run rate. And I'm going to tell you this. There's two sets of financial information in this country. If you make a certain amount of money, you get one set. If you make another certain amount, you get another. And there's what's called, being able to hit the run rate. And that's $10 million in investment capital, $10 million in assets, and you make $10 million a year. And you get a whole different set of information. But in order to not necessarily. In order to access the information, you need to be able to make a certain amount of money. But in order to apply the information, you need to be structured properly, hands down. And a lot of these things that you deal with when it comes to getting into permanent industries, if you never heard that, you need to write that down. Permanent industries, because this is how real wealth is made and how it's kept into the family, or one of the ways. Permanent industries. And these permanent industries are going to be investments. How long are people going to invest? Forever. People are always going to be investing. Banking, and I would say healthcare. And the only way you can do these is through financial endowments, and you can only set up financial endowments through a public charity, a trust, or a private family foundation. This is information that is not offered to the public. If you're hearing what I'm saying, I don't know what you did, I don't know what path you're on or something, but you're getting the juice. And financial endowments is how the educational system is controlled. Whether it's European studies, African American studies, the school isn't paid for that curriculum to be taught. There's some private family behind that, and these families have this information, and they don't want your family to know because they need the members of your family to work in they companies and in their industries so they can perpetuate the income multi-generational for their family. And we can play games and do dances all day in this trust stuff, and it's cool. But when it comes to, real, true tax exemption, it's got to be on the charitable side. Education is charitable. You got to look up charitable purposes. But you got to understand the proper structure. You got to understand what you're looking at, and you got to understand, the rules. If you understand the rules, it's cool. You know the rules of the game, you're good. But it's high frequency. Yusuf already introduced the rules to the game. That's with regards to really a mind state and behavior. Public and private don't mix. There is no money. Stay in at all costs. Do not participate in public controversies. But the rules of the commercial game, the rules of the trust game, the rules of the money game, and the rules of the wealth game, rules of the multi-generational wealth game, and the rules of the tax game. All different sets of rules, all for different sets of things. So, I know there's a lot of different ways to do a lot of different things, but, I'm, when it comes to being private, I use private contractual trust, and I use, tax exempt entities, legal and separate distinct contract entities in trust and contract form that entity being designated tax exempt and understanding the rules. But universal laws are the principles underlying every success in any and all areas. To take advantage of power and force, one must be accountable and responsible and trustworthy. And to go somewhere new, you must do some things different. And, the power is in the structure, the power is in the knowledge, and the power is in, the application of the knowledge through specific structures. We can go back and forth for days, but I know what I'm doing. I know how I'm doing it. I don't know what you're doing. I don't know how you're doing it, but I know what I'm doing. I know how I'm doing it. And it's through private structures, structured properly, and, in and within the family estate, there exists a private family foundation that is tax exempt. that can receive donations from one entity and then give a loan to a whole nother entity, whether or not those entities are a part of the same estate. As long as it's not loans and donations going back and forth between the same entities. I'm not giving legal advice, though. Get off me. I'm trying to splash y'all with this, splash y'all with this syrup because I'm over here pancaking toes, literally, like straight up. And things are getting real, things are getting serious with the economy, with jobs, and so on and so forth. And those of us who are dependent on the public are suffering. And I've been waxing poetic for almost 5 years that we need to reduce our dependence on the public. We need to start our own family businesses. We need to set up our own private estates through contractual entities. And we need to administer our private estates and do our own business privately and reestablish our private estate. Business trust, asset trust, family trust, private family foundation, LLC on the public side. Slap that with the business credit. Do your dance. A lot of people think you have time. I got time. 2017, I got time. 2016, I got time. 2018, I got time. 2019, I got time. 2020, I still got a little time, don't I? I don't know. What I do know is that if you're not emailing me, admin@welcometothefoundation.com, I don't know what to tell you. The Small Business Association is still accepting applications for businesses and trusts with regards to the economic injury and disaster loan. I'm not giving legal advice. I'm not an attorney. I'm not a lawyer. But those trustees in trustee training, those under the mentorship of the foundation, and those clients or members of the foundation, I would say, who have gotten consultations and acted on that information, they were able to, on behalf of their company that was properly set up and substantiated on the federal and state level, they were able to, on behalf of the company, apply for the economic injury disaster loan. And it was an amazing thing, It really was. And that's on the business. It's not on the individual. Like I said, we own nothing and control everything. And the benefits of tax exemption through the Private Family Foundation is right along those lines. We own nothing, control everything. Because everything you own personally is acquirable through litigation, through a lawsuit. Everything you own is at risk and can be taken from you or taxed to you. Whether you have insurance or not. Insurance policies, insurance does not cover punitive damages or intentional wrongdoing, whether you intentionally did it or not. If you get like in a proceeding in a court of law or something, and they say it was intentional wrongdoing, insurance doesn't cover that. Insurance doesn't cover punitive damages either. If you get sued, you can get sued. You can always be sued for more than the insurance policies can cover. We own nothing. We control everything. And I feel like individuals who do not have a lot of money need trust more than those who do have a lot of money. Just because those who have a lot of money, can typically bounce back if they lose everything. Those who don't, man, it took them a long time to get what little they had. And if they get knocked out and lose everything, it's pretty much a rap rizzle. But I'm gonna tell you that. Look, like you apply on behalf of the Private Family Foundation for the tax exempt status. It's granted and acknowledged, I would say, in less than 30 days. The 990 PF goes to the EO division of the IRS, the exempt organization division of the IRS. It's a whole different division. They hold different. There's a whole different attitude talking to these people. And you got to understand, the contract makes the law. So when your tax exempt entity is structured in a contract trust form, it's the most powerful charity in the United States, in America. Because contract makes the law. You understand that. You know that. Contract runs the world. That's I don't know. That's, admin at welcometothefoundation.com. I don't know what else to say. I've been saying pretty much the same things for 5 years right here on High Frequency Radio Network. Trust, real money, true knowledge, proper investments, and private family foundations. I don't talk as much about foundations. I don't think most of us are ready for that type of responsibility, but with great responsibility comes great power, comes great force. I think a lot of people just want the power, the force, the benefit, and don't want to deal with the responsibility, the accountability that comes along with wielding great power. And I think that's too bad. I really think it's too bad. We let ourselves, get away with things that we would talk a lot of stuff crazy about other people. We say things that we don't follow through on. We do things that we regret later on, or the next day, or next week, or next year, or 10 years down the line. But you know when you hear the truth. You know what you're hearing right now. You know what it is. But are you willing to be accountable for the knowledge and the information that's at your fingertips? Are you willing to be responsible after being accountable for your education, for your private estate, for your family? And are you willing to be trustworthy, to not self-deal, to co-mingle? That you can really step up and own nothing, control everything, and accept the benefits of that level of accountability and responsibility. Hands down. People want 12 steps. I mean, give me the 12 steps and let me just follow this process and let me just get it. That's unrealistic. It's not going to happen. Consistency and dedication is the only way. And it may sound good, but it may not be for everybody. So I don't talk about foundation because having a foundation in and of itself doesn't necessarily benefit a family, an individual, but in conjunction with a private family estate, with business trust, asset trust, family trust, and the family foundation, even if it's just you administering that private estate, man, you're going to be. This is how international businesses are restructured to reduce their taxation to 3% or 0%. This will incentivize you to start your own business if you haven't already. And if you don't have your own business, you can reduce your taxable income every year by 30% legally. If you have a job, legally, legal reduction of your taxable income every year by 30% for every employee. And that's because individuals can donate up to 30% of their adjusted gross income to a private charity and receive a charitable deduction. You don't own the money anymore. The individual no longer owns the money, but through the individual trusteeship, it may still control the money. You understand what I'm saying? And still have reduced maybe you made what they were saying in the current events, $50,000 a year. But if you donate 30% of that $50,000, what have you done? You just reduced your taxable income. You may just reduce your tax bracket. $30% of $50,000 is about $15,000. So you went from your taxable income of being $50,000 down to $35,000, and you still control the other income that wasn't taxed through trusteeship. I don't know what else to say. And, due to its federal tax exemption, all transactions executed by that entity and through that entity, there's no sales tax either. And then let's say if you own a property, real estate, a house outright, 100% own it and donate it to your private family foundation, if the owner of the property is tax exempt, does it pay property taxes? And you wonder why we keep getting poorer and they keep getting richer, because they have different knowledge than we do. And then those of us who do have the knowledge, we don't have the discipline. We weren't taught it. And they bet on the fact that we're not going to be able to teach ourselves the proper discipline and consistency that is required to apply the knowledge that they apply through generation and generation, while they get richer and richer and we get poorer and poorer. Balls in your court, it's on you. Admin at welcometothefoundation.com. Book a consultation, holler at me about trustee training. I'm going to tell you this, you're going to holler at me about foundations, I'm going to tell you, with regards to, obligations, contractual obligations, information and education beyond, what we offer in the public here on the foundation is only made available or offered to those who have been through trustee training through the foundation or can show obvious substantiation that they have been educated with regards to the administration of a private contractual trust. The foundation does not sell trusts. The foundation does not sell corporations, does not sell legal persons. The foundation is an educational and informational administration. You know what I'm saying? Yeah, admin at welcometothefoundation.com. Let's get it together. Business credit, setting it up. I'm helping people with a little bit of personal credit right now. But that's not an invitation to hit me up talking about, yo, you help me with personal credit. Just because I can do my dance with my personal credit and, the junior, personal credit. And then other people's, don't mean I can do it with everybody. I offer no guarantees. And then, check out welcometothefoundation.com. Go to the education tab. You got the Foundation Trust Series, Part 1, Part 2. You got Foundation Trust Primer. You got Passport No Social, Part 1, Part 2. These are things you don't have to read the Trust Series or the Passport No Social 1 and 2. You just watch it. And, I'm taking Yusuf's advice and starting to get more visual with stuff. Because, a lot of people, not only do a lot of people have difficulty reading, but a lot of people don't have time to read, to be honest. You can multitask when you're watching something. But it is what it is. I love y'all. I'm not going to take any calls. I prepped heavy for this show. I really had to go in and determine what I was going to say and how I was going to say it and how I was going to, how I was going to put this information down, hoping that you would pick it up. But I will say, admin at welcometothefoundation.com is going to holler at me. I suggest you get in trustee training right now. I suggest you start your own family business right now. I suggest you start working on your credit right now because this stuff is changing quick. And if you're at home, if you're not working right now, unemployed and stuff, you get to the rock bottom. Sometimes you got to take leaps of faith. Sometimes you got to make a sacrifice. Sometimes you got to do something that may seem crazy for the right reasons. And I've done it before, believe me. I spent my last $2, $100, $50 with no guarantee of it coming back. But it was for the right reason. I had the correct intention, the correct intuition, and was looking at it the right way. And, making investments in myself, making investments in my education, paid off handsomely. Nobody's going to give you nothing. You got to make sacrifices. If you're not willing to do that, just, I guess sit back and spectate because we out here doing our dance. So with that being said, I love y'all. I really do. It's the reason why I do this show every single week. Why I offer consultations, why I offer trustee training, why all this. I love y'all for real. And I want y'all to know this stuff. I want y'all to be able to combat this commercial realm, these public entities, all this stuff. I want you to have a alternatives. Everybody out here talking about what's going down and how you this, you that, you a slave, you all, and blah, blah, blah. No one's really talking about the solution. So, the foundation, we talk about the solution. And the solution is your private education, hands down. I don't care what you're talking about. And the foundation of the solution in your private education is understanding contract law, trust law, and trust administration. Then you got to get into some commercial law. But with that contract law and that trust law, commercial contract law is pretty easy. You know what I'm saying? And you can pass that down to your heirs. It's going to take sacrifice. And, the generation before you didn't know what sacrifice to make. You know what sacrifice to make, and it's on you. And some of us, we just got to quit making excuses, yo. With that being said, I love y'all. Y'all have a great, wonderful, enjoyable week. Take care of yourself. Email me, admin at welcometothefoundation.com. It's time. It's past time. It's almost too late. And y'all enjoy yourself. Take care of yourself. And, know that you're worth it. But also, take the time. People are like, I don't have time. You can't make time. That's not how it works. And if you don't have time, you'll never have time unless you take the time. I'm telling you, to go somewhere new, you must do some things differently. You must. This is universal. Hey, you can't get away from that. What I just said. You better just rock with it. These laws, the universal laws, universal principles will either work for you or against you. If your wisdom isn't based on the seven laws, I don't know what to tell you. But either way, I know you got this. I definitely believe in you. And I congratulate you and big up for, investing in your private education, or, checking out an informational show, educational program versus being on YouTube and being on Netflix and being on, Amazon Prime and HBO Now and all these joints. I'm very proud of you. I commend you. That's what's up. And, probably a lot of people ain't going to say that's what's up. They're not going to even recognize or know what you're doing. But I know what you're doing. And I think it's dope. I know it's dope. And I'm just going to say keep it up. And with that being said, y'all have a great week, man. Make sure you say 10 things that you're thankful for before you go to sleep, and I'll catch you next week, same time, same network, high frequency, foundation. Y'all enjoy yourself. I love y'all. Peace to God.
Doing this thing all the way live. High Frequency Radio.